Good morning, everybody. It's Chris here from Serene Education with the 4 majors analysis update for the 21st of June 2012. Hi guys, hope you had a fantastic day yesterday. Let's go have a look at the 4 majors. Let's have a look and see what's been happening on the pairs. Let's have a look at the daily. Indecisive yesterday. We had a nice break above the 1265, which was a prior support and resistance level, and in doing so, price has now moved back up above a major support and resistance level on the daily time frame for this pair. I just want to put it in so you guys can see it. You do need to put all these major support and resistance levels in. It will come in handy, I can assure you. You can see here, January of this year, we had a nice bounce on that. We had another bounce just here in the latter part of May, and then with the breakout going into June, and then we had the bounce. The bounce came back and retested the underside of this 1265, or price support becoming a new resistance, and price fell back. However, still very much in favor upside movement, and we saw price reattempting the underside of 1265 consecutively, and then a couple of days ago we saw the breakout. Now we've seen price actually consolidating above it. You can see this in this yesterday's candle, very indecisive, very small range compared to the prior candles, and the open close very, very close together, which indicates indecision. Okay, now what do we need to see? Well, it's broken above the 126500, okay, which in itself is a strong confirmation of potential for further upside movement, because if it wasn't all that bullish, then it wouldn't have made all this effort to actually get back up above the price support and resistance level. Now it's trading above it. You can see there we have 2 parts of our strategy template in our favor. Okay, now what it needs to do is it needs to remain above the 1265, and we need to see a decision candle. After an indecision, we want to see a decisive candle. Here we had an indecision at the underside. We want to see a decisive candle, not a very good decisive candle, that one. Okay, so if you want to see a decision, like here for example, indecision, decisiveness. This is a morning star. Ideally this candle here would have been far better if it was closed higher. However, the next day closed higher, and that is a classic morning star, and we should see buying sentiment coming into it. Here we need the same thing. If this is to be generally positive upside, we need to see a nice bullish engulfing candle on the upside, on the other side of 1265, not the underside, the top side of it. Okay, because then it's looking at clearly a breakout, a pullback, and then we're looking for the confirmation signal. Is this confirmation of bull, or if it's confirmation bear? Either or. Okay, and if that's the case, then we should be targeting the prior swing. In this case over here, 1280 is our first target. If we do get that bullish sentiment candle closing higher than the 1265, which will take us back to the 280 mark, which is the 50 period moving average in this case. So if I take my fib retracement from the high that we saw here in May to the low here just before June, you can see 23.6 here at 1255. Then the 38.2, which is where price is trading now at 1265. Then 1280, which is our 50% line. So we could head towards, if we get a nice through this morning on the UK session or European session, we can still find price trading and finding support and our small time frames like our hourly, etc. at 1265. Look for momentum on those time frames to show you buy signals across the board and a bullish candle, up candle, and then we should be targeting at 1280. Okay, so if we go into our smaller time frames, you can see on an hourly, for example, put that 1265 in because it's a major support and resistance level on our daily. Okay, so we make a note of that in intraday charts. Notice that price has been moving higher and the institution moving average is trading below price. So that's telling us straight away that it's being supported by an institution moving average. So we should see price moving higher, and we can see that higher swings, higher swing, higher swing, higher swing. Okay, so now you can see it's spending more time above 1265 than it's spending below it. So the more it spends time above the 1265, the more it's going to find support, and the more likely it's going to push higher. You can see over here I've plotted an RSI, relative strength index, on here to show me that there's more buying sentiment than there is selling sentiment. Okay, if it's above 50, then it's positive upside movement. If it's below 50, then it's negative. And you can quite clearly see that price has been spending more time above the 50 than below it. And you can see our CTC is complementing that. Okay, so if it spends more time above 1265, ultimately what's going to happen is it's going to rally, it's going to move higher, and we should be targeting that 1280 that I mentioned on our daily as our first port of call or target. Okay, so you can see how I'm plotting building a picture. Okay, so back to our 4-hour. You can see the institution moving average is below price. So on a 4-hour, we're seeing positiveness, and you can see that's also showing us on this upside trend from the low here we saw in early June. You can see prices moving higher, forming higher swings, which indicates upside positiveness. It's trading above all the moving averages, very, very important. And in doing so, it's also trading above a very important institution moving average. Notice for a long period of time, it was trading on the underside of the institution moving average, which is negative. Now it's spending a bit of time on the upper side of the institution moving average, which indicates that we could see a good likelihood of price to build on that. It needs to remain above 1265. If it fails to remain above 1265 and gets back below the 126500 mark, then it's back into negative territory, and we should be looking for short-term intermediate downside momentum. Okay, and then we'll target swing lows to the downside, and you can quite clearly see we have a number of them to the downside, all the way back down to our all-time low here in June at the 12300 mark. So if this is to remain positive, guys, it needs to remain above 1265. We need to see a nice bullish engulfing candle on our hourly, preferably on our 4-hour, to confirm that momentum is genuine. And then we should be targeting, as I mentioned on our daily, at 12800 is our first target. So we make a note of that. So always plot these lines in, guys, so you can see clearly where you are trading in the whole spec of things and where your first target. You always got to be, if you're going to get into a car and drive somewhere, you want to have you'll have your destination plotted out on your GPS. It's the same in trading. If you're getting into a trade, you want to know exactly where you want to go to, where your first target, and second target, third target, etc. And how much are you going to be risking? That's very important. So if you find a nice support over here, you could actually use a 1265 as a nice stop. If preferably, that's quite an aggressive entry stop loss. However, we see a nice bullish candle here on the upside. It'll generally mean that this, because it's a prior support and resistance level, quite a noticeably long-term one, then it's a genuine nice stop loss area to put it in. So factor that into your trading, guys. It's the way I look at actually trading. So, and our weekly, where are we trading in the whole specs on the weekly? You can see quite clearly now that price is now broken out on our weekly on the underside of an August 2010, the 2012 January low, and we've broken through and we're testing the underside, okay, on our weekly. So we could see a breakout, the pullback, and if this weekly doesn't close by the end of this week, we don't see the price actually trading higher than the 1265. This could be a breakout, the pullback, and then the continuation for the next week in the direction of the overall trend. And you can see the direction of the overall trend on our weekly is very much negative, guys. We have like swing lows. You can see all the institution plus the two moving averages above price acting as resistance. And most importantly, our CTC is still very much negative across the board on our weekly chart. Okay, so what we're seeing on our smaller time frames, that includes our daily, 4-hour, and hourly, is we're seeing price pulling back to the underside of our weekly, and if this 126500 is still above price by the close of this week, then it still remains as resistance, and we should be looking for long-term negativity. Okay, now it's up to you as an individual. Do you want to trade your intraday pullbacks, or do you want to look at your long-term stuff and rather trade the overall trend? So don't trade the pullback. Wait for the failed pullback and then the continuation to the downside. It's only if we see a nice weekly close above the 1265, which will generally confirm that we're looking for positiveness for the remainder of the foreseeable future, because we are trading into a major resistance level, okay, a major support on two fronts here, and this could be a potential resistance, and we don't want to get caught with our brooks down trying to trade against the overall trend, which is in this case down. Okay, it's important to visualize this, guys. You don't want to be trading against the overall market, and in this case we're just seeing pullbacks, so it's consolidating against the overall trend because it's broken lower than a major support. So you can see a breakout, a pullback, and then a continuation. Okay, it's only if we see a nice genuine bullish candle breakout of 1265 higher, it's going to tell us, listen here, the sentiment is no longer favoring further downside sentiment. We should be looking for continuations to the downside. On to sterling. Okay, a lot of consolidation over the past couple of days at the institution moving average here at 1575. I did mention we did need to see price trading higher than that to get a better confirmation of further upside movement. We have seen price moving higher after a noticeable bounce at 15300, and this 15300 is a weekly or a monthly long-term support. Okay, and if I just move out, quite clearly see here through September 2010, December of 2010, September, October of 2011, January of 2012, a major support, guys, and hence the reason why we've had this bounce on that. A lot of negativity going into that bounce. However, because of that psychological major support and resistance, price has decided to take some profit off the table after this massive sell-off that we saw through May right through to the start of June, and you can see price has tested now the pullbacks on the fib retracement to 23.6, back up towards the 38, and as I mentioned, the longer it spends time above the 38 here at 1567, then ultimately we're going to see price still re-tempting these highs and institution moving average. It's a lot of indecision here, guys. Price finding a bit of support through here. Not once has price closed lower than 38.2, so it's still happy to be trading upside favorite. However, it's being capped by this institution moving average. It needs to get above that, and the sooner it gets above that, the more likely we're going to see price moving higher with momentum. I break of 50 here at 15,800 and back up towards the 61.8 with ultimately the 78.6. Let me just get that in 78.6 before we see price reattempting the 100% well up here at 1630. So 78.6. Yeah, this consolidation. So there's a number of targets to the upside. Great. So that's one thing we need. We do have targets. We do have confirmed targets. If we do, and this is the most important, if and when price closes above this major consolidation. We don't want to be trading consolidation, guys. We want to be trading decisiveness. Indecision yesterday. We want to see a decision candle. Either give me a bearish engulfing to confirm that this is definitely a ceiling level here at the institution moving average, and I should be looking for downside movement to 23.6 and back towards the 15,300 for the remainder of this year, this month, or bullish engulfing, break higher than this massive resistance level here, above the 50% or the 15,800 to target 1, 2 to the upside. It's important that we get away from this institution as quickly as possible, either side. Okay, we want to see a decision candle. I'm not trading these pairs at the moment because I haven't not seen a decisiveness from the market. Okay, that's as simple as it gets. Wait, be patient enough to wait for these confirmations and then trade the confirmation. You can see over here, for example, trading into this 15,300, we saw indecision. Give me a decision candle. Bang! Then I trade the decision. And you can see how in a couple of days, I'm still positive to the upside. I've made my decision. Okay, it's the same over here. Indecision, decisiveness. Then you trade. Indecision, decisiveness. Indecision, decisiveness. Okay, we want to see a decision from the market. We have a major resistance level above us. If this is still swinging higher, and we've got 2 parts now to our 4-part strategy, it's telling us the momentum is still favoring upside because it's spending more time here finding support. If it ran into this institution moving average and found resistance, it could have well fallen back before then. It could have actually fallen back on this candle here in particular, but it wanted to stay above here. So the sentiment is still generally favoring upside, but in order to do that, it's failing to break a major ceiling level. So it just plateaus, it consolidates at the underside of this institution. It needs to break that, okay, to confirm that it's genuine sentiment. The last thing you want to do is to be suckered in, thinking it's going to go long because you're speculating, and then it goes against you. So rather wait for a decisive candle, and then you trade the outcome. On to Swiss franc. Let's have a look and see what's been happening in this pair. Very indecisive the past couple of days. We've had a bullish engulfing, bearish engulfing, and then we have an indecision candle. Here again, it's very, very important to see what price has been doing recently. We had an all-time high at 960. Price failed to get above this back in January of this year. And then we've been pretty much trading, consolidating sideways, but most importantly, the institution moving average still remaining below price. So overall sentiment was still positive. Even though we're consolidating, it was still positive because you can see that swings were making higher highs, which is important, even though we were getting lower swings. So price was actually been squeezing through March, April, May, bang, and we got the breakout. And since early May, we've been trading higher, and we actually traded straight through this major support and resistance level here at the 960 that we saw on the January low highs. Apologies, but it failed to actually find support now. So once it broke above this major resistance previously, we wanted to see the pullback, which happens 98% of the time. However, we wanted to see price now being supported at 960 because it was prior resistance, and then moving higher on that. It failed to do that. It broke through again and then went into this consolidative range at the 960. So not very decisive, and in doing so, spending more time below 960, which means that overall sentiment long term is looking rather negative now. Okay, if it spends more time above or below something, it's going to confirm it's either bullish or bearish. More time below 960, it's bearish. More time above 960, it's ended up being positive. Notice our CTC on either side is still blue. However, we have two parts of negativity, indecisiveness in the market. And as I mentioned, it spends more time below 960, it's more likely to be negative. Notice on the pullback, price is now trading at the underside of the 38.2. Prior support. Resistance. Now, indecisiveness. We had an indecision candle yesterday at the underside of 950. The underside of 38.2. Is this resistance? We've got to see that in the confirmation signal because we have an indecision candle. Give me the decision. Give me a decision bearish engulfing here. Then we should be targeting a break of 50 to 61.8 and ultimately down to 78.6. See how I'm giving myself, it needs to do these in order to do that. See? You give me a decision candle and I will trade you, whether it's up or down. In this case, it's spending more time below 960. It must be negative. So look for negativity in the market. Bearish engulfing, target for 50%, 61.8 and the 78.6% as for the foreseeable future. Last pair of the day is the US dollar Japanese yen. Let's have a look and see what's been happening. Okay. After a massive move to the upside from February right through until mid-March, since then prices reverted to the downside. In doing so, before we had this move to the upside, through February, March, we had a major break of a support and resistance level at the 80 here, which happened to be a very strong support and resistance level going back a number of months for this pair. If you just look at a weekly chart, it will show you exactly what I'm looking at. And since then, we saw price really rallying to these highs here. Actually, in the overall, the downside with a pullback, this actually went to 61.8 to 61.8, and then we had a failed return to the downside. However, on the pullback, price failed to actually find a definite bounce support here for a reattempt of these fib retracement areas to the top side and a reattempt of the 8400. In doing so, it actually consolidated here at the 80, moving sideways, not really giving us any confirmation signals where price was if price was generally going to look for support or resist or fail. We want to see a decision candle, and that over here is a decision. Notice a lot of decisive candles here. Look through here, not very decisive. A lot of wicks, a lot of small trading ranges, not very decisive. That to me is a decisive negative candle in this case, engulfing all of this and showing up as price moving to the downside, testing the 61.8, and then moving to the underside of that 8% line. And as long as that price remained below this major support and resistance level here, then ultimately it's still looking negative. Notice the CTC starts to go red across the board in this case, and ultimately what happened was price failed, breakout, pullback, and the continuation to the downside, targeting 61.8 and the 78.6. Then we had a bounce. We saw price fail to actually trade through that, and in doing so, finding support here at 78.6 and then bouncing higher towards 61.8 and ultimately re-attempting the 80. And then you can see a full week of indecisiveness or consolidativeness at the underside of 80. And as long as it maintains below 80, guys, it still remains bearish. It's just bearish consolidative. It's consolidating in a bearish trend. Okay. It's very important that you see that. The institution moving average, however, is still below price. So long term, it's bullish, if it makes any sense. Okay. But it's trading at the underside of an 80 in this case, and so on a smaller time frames, it's still very negative. Notice the CTC is telling us it's still negative sentiment. So we need a break above 80 to be even look at considering this as favorite long-term positive, but as long as it maintains below 80, it is long-term negative. Okay, we have lower swings depicting downside movement, and in doing so, it's telling us that sentiment is negative. So we should be looking for nothing more than negative sentiment to the downside. Okay, get a break above 80, then it changes the whole complexion of the trade. Okay, so hope this has made sense to you guys. Hope you have a fantastic trading day today. Please be aware there's a lot of news out today. We have some German manufacturing PMI results this morning at 8:30 GMT, and industrial production quarter-on-quarter figures for Swiss franc. It'll be interesting to see that one over there. Then we move into sterling at 9:30 GMT this morning. We have the retail sales month-on-month figures. They're expecting a positive figure. The previous figure was negative 2.3. They're expecting a forecast of 1.1. So that's a positive. So if retail figures are positive and the price comes out, or the actual figure comes out higher than 1.1, then look for the sterling to really gain that strength against the US dollar. And that's what we're looking for. As we went through our sterling chart setup, we wanted to see that bullish engulfing now at the upside of that major support and resistance. And then we have 10-year bond auction. That can also be quite interesting. It'll tell you how strong the economy is just by looking at the bond auction, 10-year bonds for sterling. So that's going to be tentative. That could happen throughout any time this morning in particular. Then we go into the US session this afternoon. We have unemployment claims, guys. They're expecting a slightly less people to be applying for unemployment. The previous figure is 386,000. They're expecting 381. So it's a positive figure because there's less people actually applying for unemployment. So if it comes out even less than that, look for price to move for the US dollar to do pretty well this afternoon. We also have existing home sales figures, which is very, very important. And then we have the Fed Manufacturing Index. Here again, also the manufacturing index looking slightly positive. The previous figure was a very, very negative one at negative 5.8. They're expecting a positive forecast of 0.7. So if it comes out 0.8, 9, 10, then look for the US dollar to do quite well this afternoon. So just be aware of the news announcements, see how they will reflect on the charts. Okay, see what price is doing on that particular pair you're looking at, and see how these news announcements could actually reflect in the overall drive on those particular pairs for that time frame. Okay, I'm out of here. Have a fantastic trading day. Please ensure that you back up your CTC or your trading with some sound money management, and keep it simple, guys. Make sure you follow the simple rules of trading, plot support, resistance, trend lines, and then look at the overall aspect of what price is doing relative to those major support and resistance levels. Gauge what she's doing, looking at the candlestick patterns, and then working out how or where she's likely to go to. I'll see you first thing tomorrow morning. Until then, trade serenely.